Hello guys, it has been a minute. Thank you guys for watching my videos and also subscribing to my channel. If you haven't subscribed to this channel, you are missing out a lot, as I bring you content that is valuable to your trading every week. At least once a week I post a video on here, and I believe that it will help you improve your win rate or improve on your trading experience. So today guys, I'm going to be showing you a very simple strategy based on a daily candle and a 15 minutes candle. So watch this video till the end and you will see how profitable it can be if you applied it correctly as I show you here on the screen. So watch this video till the end to understand the full concept of this strategy. Guys, so as you can see, this is an illustration of a downtrending market. All right. So in case you have a resistance level like this one, a major resistance level as I illustrated here, if you have a major resistance level or you are actually trending, this strategy works in a trending market, not a consolidating market, guys. So it has to be either a downtrend, okay, or it has to be an uptrend, okay, an uptrend like in this case. All right, and we are going to review both to see both of them. So we'll begin with a downtrend. As you can see, these are daily candles. Okay, it has to be a daily candle for it to be valid according to this strategy that I've back tested. All right, so it has to be daily candles. So this is our first daily candle. All right, this is our first daily candle, this one here. Okay, this is the first day and this is the second day. All right, so that would be the first day and this would be the second day candle. All right, so now you have the first day and the second day candle. They have to be daily candles. So now we are watching to see in a bearish momentum, okay, especially when this happens at areas of value like resistance, and you have the first candle being this bearish first day, and the second day you have another bearish candle like that. So you wait for the close of the second candle on the next day. You wait for its close and then you mark out the close of that candle, which is this one I've marked out with the dotted line here. Okay, so this would be the close of that candle right there. This is the close of the second day candle. You mark a line, a horizontal line, like this line I've marked out the dotted line. All right, so now what you are looking at on the third day, all right, on the third day, all right, so now on that third day, okay, when you get a candlestick pattern like this one, bearish engulfing candle, you enter your trade, okay, and on the third day with that confirmation and target at least a 1 to 2 risk to reward ratio to the downside. This would be on the third day, guys. All right, and make sure you place your stop loss just in appropriate places, okay, in the 15 minutes time frame, and target at least a 1 to 2 risk to reward ratio. Okay, guys. So that would be on the third day. All right. So make sure you open your position below the second day candle. All right. It has to be below. That's when you open your trade with a confirmation of either a bearish engulfing candle or actually these are 3 black crows. All right. So also, you'd open your trade on the third day with the candlestick patterns like 3 black crows. You see 3 black crows here. Okay. So at the close of the third crow right here, the close of the third crow, you open your trade and place your stop loss just above the previous day candle close, and then target a 1 to 2 risk to reward ratio. And then target a 1 to 2 risk to reward ratio all the way to the downside. Okay, so that's what you do. All right, So the entry time frame has to be a 15 minutes time frame on the third day, guys. All right. And make sure you sell, you enter your trade below the horizontal line or below the previous day or the second day close. All right. So now this is in a downtrend. It has to be in a downtrend, guys. All right. It has to be trending downwards. And the second example would be on an uptrend, in an uptrend. So when you have an uptrending market, or either from an area of support like this, if let's say it's an area of support and you see a reaction like this, you have a bullish momentum, you have a candle like this the first day. So this would also be the first day, okay? And that would be also the second day candle, okay? So the second day candle closes above the first day candle, all right? So when the second day candle closes, okay, then you go to your 15 minutes time frame on the third day. This would be the third day. All right. So on the third day, you are looking for your entries. So this would be 15 minutes time frame on the third day. Make sure you buy above this horizontal line. Okay. You buy above that horizontal line with the confirmation candlestick patterns like bullish engulfing candle, all right, and target a 1:2 risk to reward ratio to the upside, all right. So you target your 1:2 risk to reward ratio to the upside, or even a 1:3, and you can keep scaling in positions as the trade, as the market continues to rally to the upside. I will show you that on the real charts, just a quick example. So this is how you'd place your trade on the third day with confirmation candlestick patterns in 15 minutes time frame, okay? And this buy has to be a price above the previous day close. This would be, you see the dotted line? This would be the previous day close, all right? This one here, this would be previous day close. So you place your trade just above there with a candlestick confirmation, that is a bullish engulfing candle to the upside, and target a 1:2. You can also have a confirmation of 3 white soldiers, like in this case, this is 3 white soldiers. So you buy above that line again, all right? You buy above here, all right? After the close of that third soldier, you place your stop loss just below the horizontal line or below the previous day close, and then you can still target your 1:2 risk to reward ratio to the upside, guys. All right, you'd still target your 1:2 risk to reward ratio and continue even holding that trade, okay, and continue even holding that trade for as long as the market keeps rising, all right, and keep scaling in positions. I'll show you how this strategy works on the real charts. Below here would be your area of selling, and this would be your area of buying above here, all right, all the way to the upside. You continue scaling in positions above there. All right, guys, this is our resistance level. We can see that there is this resistance up here, all right. So we see a double top formation up here on the daily time frame. So this is a reversal castle chart pattern. So that is our first day candle. We'll just say first day, all right. And then the next one here is our second day candle, this one here. The next one here is our second day candle, this one here, okay. This one is our second day candle, all right. So we say second day, that is our candle number 2. So now we mark out the close of that candle. We mark it out with a line, with a horizontal line. This is the close of that candle. We mark it out on a daily time frame. So that is the close of our candle. So our area of selling should be below that line. This is our area of selling. It has to be below that line. Okay? So we mark that area out. in our daily time frame, we are going to mark out, all right? We are going to mark out that with a vertical line that very day candle when it closed. That is our vertical line. This is our vertical line right here. All right. So we mark out with a vertical line, okay, that daily candle, second day candle, all right, when it is closed. Then we go to our 15 minutes time frame on the third day. That the previous day was 27th. Watch this, guys. You have to look at the date here. The previous day was the 27th of September, right? 27th of September 2024. All right. So now we want to sell on the 28th of September. That's what we are looking at. So because the previous day candle was 27th, we are looking to sell on the 28th, but 27th was a Friday. So the market will be closed on the 28th. So we are going to look at selling on a Monday. All right. On a Monday would be 30th September. Okay. It would be 30th September. All right. So we move this vertical line. All right. We move this vertical line to Monday. Okay. From midnight. All right. From midnight Monday. All right. On a Monday. 12:15 a.m. Okay, we'll leave it at 12:15 a.m. Okay, so now we are looking at this line here is marking our 12 a.m. okay, on Monday when we are supposed to be trading, because we close the second day candle closed on Friday, so we are looking to sell on Monday in this green zone here that we marked out. So now at midnight on Monday, okay, probably when you are still sleeping, the market still starts moving. Okay, as you can see, the candles start moving. All right, but we are waiting until New York session or London session when there is more volatility. So as you can see here in my country, London session opens around midday or 1 p.m. Between there, the volatility kicks into the market, okay, in London session. So you'll be looking at London session around this point here. All right. You'll be looking at London session around this point. But for me, I'll be waiting for New York session. New York session in my country begins around 4. Okay, so 4 is around this point here. If I use my horizontal, if I use my vertical line, 4 p.m. is around this point right there. Okay, so New York session begins around here. All right, so now that is a Monday. I'm looking for volume so that I can enter. So as you can see, when the New York session begins, okay, the price drops, and the moment it enters my green zone, okay, it has entered my green zone right there. Okay, let us play a little bit of that. Okay, we are now looking for candlestick patterns to enter this market. So I would enter here with this bearish engulfing candle, place my sell there, and place my stop loss just above this dotted line, but I'll place it just above that dotted line right there. Okay, and then I'll target a 1 to 2 or 1 to 3. Let me see a 1 to 3 risk to reward ratio. Okay, in that direction, I'll place my stop loss just above there, and then I'll let this run. Okay, so let's play this forward and see what happened. As you can see, it's dropping. The price is dropping. All right, as you can see, you have to be patient with the market. You have to hold that trade. Don't get so emotional. Once you have set your stop loss and take profit, you just have to hold that trade and wait until the trade matures. Is that you just continue scaling in scaling in as you move your stop loss even further into more profit, okay, as you move down. All right, so this would be a very good trade. As you can see, you keep holding as the trade moves even lower. You keep stacking in trades at every retracement. All right, so that's how you would actually hold this trade even longer for more money. You can see how it's moving down, okay? Just with this strategy, you can make lots and lots of money. The target would be several pips down as you keep stacking as the market moves. So this would be roughly 400 pips drop, guys. Roughly 400 pips drop if you held this trade all the way down here, okay, as it continues dropping. You have, let's say you have a support level. This is a support, okay. As you can see, the price could not break below here, could not break below here, could not break below there. All right, so we are waiting for this scenario to happen, this scenario, okay. And I'm going to be showing you, this is a support level. This would be our support. Would be our support level right there, okay. The price got back here, we are anticipating to buy, all right. And our target would be first this level up here, okay. This would be our target up here, okay. So that would be around several pips up there. From this point to that point would be about 598 pips. That is possible. All right, so just imagine the potential of this strategy. So what we are looking at, we can see a downtrend here, but then when we get to this point here, all right, we see that there has been a support here. So the price is retracing to retest this support level. So at the support level, we see a reaction. The first day candle is this one here. This is our first day candle. I don't know if this is our first day candle, the blue one, that one right there. That is the first day candle. I'll just mark it out as 1. And then our second day candle is obviously this one here. That is our second day candle. Okay, that is candle number 2. Okay, that is candle number 2. All right, now we mark out with a horizontal line the close of the second day candle. That is the close of the second day candle. Okay, so we are going to be buying only above this area, above that line. All right, we are going to be buying only in that green zone to the upside on the third day. So right now, we are going to use our vertical line to mark out that second day candle right there. All right, and the date for that candle is 17th June. So now on 17th June is Monday. So we are going to be selling, to be buying on Tuesday the next day, which is the third day. All right, but that would be in the 15 minutes time frame. So now we go to our 15 minutes time frame. Okay, so that sideways movement is going on right here. So now we are waiting for a breakout of this sideways movement before we can place our trade. Okay, here we go, here we go. We're still waiting for breakout of that consolidation. Breakout, retest. Wow, that's, you see the breakout and retest right here. So that breakout and retest, we would confirm our buy from there. So we would buy from right there after the retest with that candle. All right, with that hammer right there. I don't know if you can see it. And then we place our stop loss just below here, below that green line. Okay, and then target a 1 to 2 or 1 to 3 risk to reward ratio to the upside. This case will target a 1 to 3, and let's see how that plays out. Okay, Let's play this and see how that plays out. Okay. Oh, plays around like it's coming to hit a stop loss, but you have to be patient. You have to be patient with the market and let it do its thing. Okay. As I told you, when the price gets to 1-to-1 risk to reward ratio, 1-to-1, you can move your stop loss to break even. Okay. And then hold that trade as long as you can. All right. We're still on. Okay. We're still on. Our target is that goes even up to 1-to-5 risk to reward ratio. We're still holding this trade. Okay. You know, with trade, psychology is very important. You have to be patient with the trades and hold as long as possible. You're looking at about 500 pips to the upside. So when this starts moving upwards, you know that it is for sure. See the momentum now kicking in. Momentum is now kicking into the market. As you can see, that moving upwards. All right. And at every level here, you can stack trades. At every retracement, you can continue stacking trades. When there's an impulse and a retracement, at the retracement, you stack another trade as the market moves upwards. All right. Thank you guys for watching this video till the end. Consider giving the video a thumbs up. And if you want me to explain something better, or if you have any questions, just comment down below your thoughts and I will be happy to respond. And also, if you are looking for mentorship, my contacts are in the description below. You can send me a WhatsApp or an email and let's talk about it. Thank you guys. Until next time, bye-bye.